Okay, so let's take a look as of the 4 hours. Okay, so that we're not impatient and not to jump the gun and buy earlier than required or than expected. We know that we're gonna bounce at a wave 3 or a wave B. You're looking at the top of wave 3 here and the top of wave B. We did this since yesterday. Okay, now over here on the 4-hour momentum, you're looking at a bounce at zero line. Sorry, a bounce at overbought levels. So this is oversold levels. I keep mixing them up, very sorry. This is normal and will happen, definitely will happen. There will be a bounce at overbought levels, oversold levels. You're looking at this bounce here. It still has a bit room to run. Remember, a bounce at oversold levels can happen below oversold levels actually, but just slightly below oversold levels. Okay, so this means that we're doing projections right from wave 2 all the way down to wave 3. This is that wave 5 that's going on. Wave size 5 still has another leg down to go, even all the way to 861. Current market is 902, we think, and even 808. If you look at this internal segregation, there's a 1, 2, there's still a 3 going on. This is going down, even though we are calling it a 5. It is probably an extension into that 5. It's got to bounce at 861, go to the upper boundary of this leading diagonal. This upper boundary of the leading diagonal, okay, can actually extend. That is really normal, and become something like this. Maybe this is a bit too wayward, but we expect an extension in this structure because of the negative momentum on the 1 hour and the 15 minutes. There's very strong still negative momentum to unwind. Unwind means that you have a bounce here. The market will move all the way to 982. The market will fall back again to 888. The market will bounce again to 935. The market will fall back again to 862. We can only go long and hold once we have positive momentum on the 15. All right, or a cycle extreme on the 15 minutes. This is a 4-hour chart. Okay, so at that point, when this is going on, when the market bounces at 861, moves all the way to 981, then falls back again to 873, moves up to 905, and does this choppy action, you'll find that this wave 4 is trying to do a degree 1. If this is the case, the market becomes a buy by taking a trigger signal on the 15-minute chart. If this is not the case and the market and the momentum plot is still below zero and still extending, then we stand down, we do nothing. If we are swing traders, if we are actually going to be buying this, go all the way to 1,000. If you want to go to below level 1 here, 1,057, and go all the way to 1,000. All right, then you need to see this kind of momentum, negative momentum, bounce at oversold. This is on the 4-hour chart, and also respectively in the same time, you want to see the 1 hour, or at least the 15-minute chart, this 15-minute chart begin to do a degree 3, and the 1 hour begin to do a degree 1. None of this is happening. Okay, so does this mean that you cannot actually do any trades in Tesla? No, you can. We can actually do trades in Tesla, all right, but these are only short-term trades. Okay, so just bear with us a second. Okay, so we always want to be on the buy side, even on negative momentum with Tesla, because this is fundamentally strong. We also know, if you go back to this 4-hour charts, that we expect to not know, again, sorry to use too confident wording, we expect a bounce at, of course, moving average and 861. Okay, so we buy part size, maybe 1/3 of our initial swing pivot size. So we buy part size, all right. Remember, this is of course a 4-hour chart. We buy only part size, and we implement that same technique that we're going to implement with Bitcoin by going out at the next support level. We are on negative momentum, so we don't want to go all the way to the upper boundary of this. This is $1,000, all right. We don't want to go all the way up to the upper boundary of this ending diagonal. Okay, so suppose I was going to buy at 861. I just checked that this is 138.2. I would buy 852, only part size, 1/3, all right, and take profits at 943. Then we curve the trade and take profits at the next support again, probably 942. The market will dwindle lower. I will buy lower supports because the market is being contained by the lower boundary of this ending diagonal. Okay, so the market will dwindle lower. I will even buy all the way down to 850. Remember, this could actually now correct. If you go to the 4-hour charts, this leading diagonal, we were trying to extend it. It can extend seriously. Maybe we are not showing it, but it can really extend all the way to level 1. So I can just, this is why we don't want to be impatient. It can go all the way down to this internal level 1, $800 or 796. It will probably do that. All right, the good thing about buying at these levels, 861, why would we want to buy if it's going down all the way to 800? Because suddenly the market could move higher on something fundamental and we are in the trade. So these 1/3 buys that you want to do, you may wish that you don't want to have a take profit. You will only close manually. You open on a regular basis your station. If the market is doing 946, you close manually. Maybe it will be a sudden breakout and the market will complete its correction at the neckline or slightly below the neckline. So we're always in the trade. We're always in the money. Okay, now we were saying earlier that this could actually extend all the way to 800. Yes, it's going to actually it is going to extend all the way to 100. If nothing fundamentally strong occurs, you're looking at this ending diagonal because the market would always revert to the mean. 800 is a very strong cycle level, so if there's nothing new going on, nothing fundamentally strong going on, the market will just chop regularly all the way down to 800. So now it's best to have the remainder of our size, our entry. If we were buying one standard contract, for instance, I would consider to buy 1/3 or 1/4 of this internally now and take short-term profits. The remaining 3/4. All right, so the remaining 3/4 on this, we're gonna have a limit entry long at 800 and 805. Because we expect the bounce there. Seriously, the bounce should be there. Okay, regarding stops, we know what to do. We're gonna have a stop at 700, not a stop. You're gonna buy, I would consider that is, we could buy, we could sell, I'm very sorry, sell CFDs for Tesla below, using a sell stop at 700. So if the market actually breaks below level 1's, that neckline, we know then this is a very big head. We go out of our longs on a rejection higher. Okay, you're having this neck here, you're having this shoulder here, 880, and then get rid of our shorts on a retest of the neckline comes in at 731 and whereabouts of this. A neckline will never be broken unless you are doing an ABC correction, meaning that we're already doing an ABC correction, so it should terminate somewhere above the neckline and move higher. To go all the way down to 700, you're doing a 5 swing into that C, and it would mean that you're gonna get a correction into some kind of a shoulder, and then another, this is an ABC correction. You break this neckline to go for the next neckline. All of this is not gonna happen, of course, unless there's something very, very severe bearish developments that are going on with Tesla, which is not the case, but we just quote it or mention it just to know how to react when we see it. You will see something bearish on the market at that point, and we'll understand why that is happening, so that we just note. All right, okay, so the current market is not really a buy. You would want to buy at 800 if you're going to be on 810 and 800, just above level 1, if you want to be a swing trader. At 800, it takes you to 50% of this. So allow me now to move these fibs. A buy at 800 will take you to at least 50% of the whole correction. So suppose I was going to bounce at 800, I'll just have my fibs drawn down all the way to 800. It will take me to 1018. 1018, you'll note, will do this shoulder here does 887, so it will do some kind of a shorter head, but you will see 1018 Probably that is okay. That is the usual case in strong issues. All right, if this is going to develop, we check the momentum. Remember what we said yesterday, we check the momentum on the daily and on the weekly chart. The weekly is very strong. The weekly chart is very strong, and this means that the bounce will actually do an ending diagonal pattern. We're doing a wave 5. Okay, this weekly is very strong. We are above overbought. Okay, so if by the time you get to 800 the weekly momentum is still strong, you can only expect that you're going to do the same high or a higher high. That's what you're seeing on the daily charts and the 4-hour charts. They're all actually zero line bounces, even though they're occurring below the zero line. Okay, we're back on Tesla now. All right, so we were just saying that the bounce should come in at the top of level 1. We have very strong momentum on the weekly chart, and this is very, we think, maybe we could be not, maybe we're not very sure about it, but a bounce at 800 is at the lower boundary of this Elliott channel, will take you to the upper boundary of the Elliott channel, and on this kind of momentum, weekly momentum that we're seeing all here before us here. And that all of these corrections we check them now on the 1 hour and the 4 hours are actually zero line rejections, nothing more. All right, so it will just be really actually zero line rejections, and it will just be that all of these cycles on the daily and on the weekly chart are bottoming out together. That's all there is to it. They're all trying to inflex a certain point where they all bottom out. We're trying to buy at that bottom out, and we expect it's going to be 800. But you're looking at, this is the daily chart. All right, you're saying zero line rejection. So this is typical of a degree 1. It's just a basing formation, a consolidation. It is not a bearish market. Now this is adding up to what you're seeing on the 4-hour charts. This is also a zero line rejection, but at oversold. And on the 1-hour chart, you find that all the momentum is contained at overbought. It is extending, it is triangular, but it's all contained at overbought. Once the feed out of the 1 hour becomes positive, at least becomes neutral, all right, everything changes across the board. The day takes off. The 4 hours, of course, will bounce at that oversold level. You have a very strong weekly chart, and therefore you are going to make a new market top. Of course, the market is wise, and it is waiting for a good development, a good fundamental. A lot of developments are coming out of course, Tesla, and strong money managers are projecting $3,000 actually as fair share price for the shares. So buying at 800, of course, it's a very good fundamental buy. With the kind of momentum, even if you continue to see negative momentum on the daily chart, you're looking at an ending diagonal into that wave 5. So you're going to 1,240, you're going to 1,380. You're looking at these projections. We were looking at these yesterday. We really are going to 1,380 because you need to tilt upwards and then have some kind of a negative, have some kind of an ending diagonal at that point. We take it to, so buying 800 means you would want to invest, hold it all the way to 1,200, 1,300. At that point, you are going to be seeing something like this. Of course, there's going to be some kind of an ending diagonal, and it will be contained by that lower boundary. You're going to test higher levels all the time. All right, let's move on. We could consider to start making internal half-size buys at that level that we consider is appropriate, around 860 and 862, on the belief that the lowest that the market will make is going to be 800. So we only make part size. If the market falls all the way to 800, of course, we add aggressively. There will be no problem. Our remaining 2/3. All right, we know how to protect the position by selling using a sell stop below $700 and using CFD contracts.